Welcome, everybody. It's Tax Tuesday today. And so, again, today we're talking about taxes. In particular, are you tired of paying too much in taxes? Well, a lot of people pay way too much in taxes because they don't tax plan. All they think about is filing their taxes around tax season. They've been programmed by the markets, the marketing teams, the marketing schemes that are going on out here, not to mention tax TikTok, tax Twitter, tax Instagram, all the other people who have no tax degrees, no tax experience, but they're following these tax gurus. But today I wanted to bring on somebody special who all they do is tax planning. So I wanted to bring on my girl today, Shonta Thomas. She's an enrolled agent. She's got a degree in accounting. So she is official and she loves doing tax strategy. She's even helped me out with some of my clients with doing tax strategy. So let's welcome Shonta. How you doing today, Shonta?
I am good. Thank you for having me.
All right, I gotta give you the horns. You gotta get the energy flowing. So you are an accountant like me.
Yes, sir.
All right. So how long you been in the game?
So I've been in industry for 19 years this year.
Oh, you're old in the business like me.
Yes, sir.
Can you guess how many years I've been in the business?
I'm gonna say 20.
Nope. Got to go higher.
Higher? 25?
35, 36. I can't
Really?
can't really figure out where it starts. But
Wow.
20, I think it's like marriage, right? You're married too. I'm married. I say anybody that's been married 10 years or more are old and married.
True.
Like you done seen it all. You might be surprised by a couple things here and there, but not really surprised. So, this tax season, I'm not surprised. But the thing that makes me crazy is as I move more and more into tax resolution, tax planning, I'm like, people don't think about taxes in a holistic fashion. They only think about it around tax season. And I'm like, wow, what can we do to talk about this more? So I've decided to talk about tax planning all year round in some way, shape, or form. So that's why I'm excited to have you on. What do you think is the most important thing people should be thinking about when it comes to tax planning?
I think when it comes to tax planning, the things that people honestly have to think about is exactly what you just said. They got to think about doing this all year. Like people look at tax and they go through the tax season, they've done their tax prep, right? But then they feel like they don't need to think about it again until next year. That is the worst thing they can do for themselves. They need to think about it all year long so that they can reduce their taxes. It's not something that you can think about during tax season and that's it. It's you have to be active in reducing it. That's why they call it tax planning.
Now, how do you define tax planning?
That's a good question. So when I think about tax planning, it really is two sides of this, right? So I look at tax prep as anything that is compliance work. So if it's income, if it's expenses, if it's ensuring that what you received from the client is on the tax return and it's on there accurately, then that's tax prep. Anything you're doing to help a client maximize credits, find additional deductions, look for loopholes, help them save in any way outside of compliance, just the things that have to go on the return is considered tax planning. So if I'm helping you to do something as simple as the home office deduction or business use of vehicle, well, that's not something that you have to have on the return. That's something that you get to put on the return if you know how to do it and do it properly. So to me, that's tax planning. It's not the same thing.
So I know you swinging on me when you say that, right? So let everybody know. Shonta helped me rethink about the services that I'm providing to many of my clients. Home office deduction was one of those things. I never really thought about it as a tax planning tool, strategy, mechanism, but it absolutely is. And so I asked Shonta about time spent in industry versus mine because you can always learn something, right? as long as you're open minded enough to learn from people. So she's got 20 years. I got 35 years in. So technically, I'm the old dog here,
Yep.
right?
Yep.
And she's not a dog, so don't nobody get no ideas. But right, I'm the old dog in this, but I can still learn some new tricks. So I thank you for that. I thank you for that.
You're welcome.
All right. So when we talk about tax planning, right? You talked about home office deduction. I gotta ask, you said vehicle usage. So you mean to tell me everybody shouldn't get a 6,000 pound vehicle?
I mean, you can, doesn't mean that your tax professional has to write it off, has to write it off for you. You know what I mean? So a lot of times people are hearing different things on social media and they're like, well, I can do this, or I can do that, or I can do this. And they're actually going out to do these things before even talking to their tax professional. So they don't even know if in their case they actually can do it or not. But if you are making the choice to go out and do these things, you need to first talk to your professional to even see if there's something you can do. How frequently do you even use this for business? Because you can only write off the business amount that you use it in the business, the vehicle.
You know
But
why I'm
people,
laughing, right?
yeah, because people literally come to me all the time and be like, I can write my car off. You just drove to my house in that same car that you're trying to write off 100%. This is not a business meeting.
Oh,
You
they're not coming to your house as you're their accountant. They're coming as your friend.
Yes. So you
Mm.
can't write that off 100%. You can only write it off to the extent that you're using it for business. And that doesn't include if you have like a wage job and you're going back and forth to work, because a lot of people confuse that too. They think, well, I go back and forth to work. I'm in the similar field or in the same field, I should be able to write it all off. No, that doesn't include that. So there are all these things that you have to make sure are in place if you're going to do it. And that first starts with talking to your professional to even see if you can do it. Don't just go out and buy a 6,000 pound car because you think it's going to benefit you, because what some people are finding out is it doesn't benefit them. And then they're mad. But you
I
can't be
mean,
mad at nobody but yourself.
one of my favorites is I think I saw somebody say they brought a G Wagon in their daycare.
Mhm.
And I said to them, what children are you transporting in your G Wagon? And he was like, but I do stuff. And I'm like, what difference does that make? Like you said, what business use and application are you doing with that vehicle? But TikTok, tax TikTok is strong out here, y'all. And it be strong and wrong, but
Strong and
I don't know what to do.
wrong.
I don't know what to do, y'all.
Yeah.
So, all right. So, tax strategies all year long. When should people start? Well, let me back up. What's a foundation that clients need, whether it's business or an individual, because they both can do tax planning?
Mhm.
What kind of foundation do they need to effectively tax plan?
So we call these our three absolutes. So our absolutes are, you need to be working with a professional bookkeeper. So this is for our businesses. You must be working with a professional bookkeeper. I
Ah,
don't.
bookkeeper.
And if you listen, if you are not an accountant or you don't have a background in this, I don't trust your books enough to do a tax plan for you. And even though a lot of people look at bookkeeping as something that's easy that they can do themselves, it is the foundation of that business. So if you don't have nothing else, you need somebody who's doing the books and doing them properly. So you must be working with a professional bookkeeper. Um, in terms of taxes, you need to be working with a professional tax preparer, not yourself, unless you just have just wages, just simple wages and nothing else. Then you need to be working with a professional tax preparer, in particular if you have a business. So you want to make sure whether you have a business or don't, if you have anything more than just W-2s, then you need to be working with a professional tax preparer. The third thing is, this is business again or personal. You want to make sure that you don't have any outstanding tax liabilities that have not been addressed. So some things can take up to 2 years to get them through the system and get it cleared up with the IRS. There's a lot of back and forth. So that can take up to, a year and a half to 2 years. And I have had clients that it has taken 2 years before we could actually do the tax planning. As long as you have something in place, an installment agreement or something that's going to allow you to actually be in compliance. Until that's done, even if you're still paying on it, you don't need to start tax planning. So those are my three, those are my absolutes. That is your foundation. Once you have those three things, then you're ready to have the discussion about tax planning. The next thing you're going to need is money, because tax planning, contrary to belief, everyone just thinks, well, I'm saving money, so like it doesn't have a cost. No, it does have a cost. So even if we take the business use of vehicle again, okay, for you to write off stuff in the business, that means you have to use it for business. That means you have to keep track of things like your gas or depending on how you're going to do it, or your mileage, right? So there are certain things that you have to do. There's certain money you're spending to maintain the car, to have a car, to make a monthly payment, to pay for. There are certain money that you're spending to even get a deduction. So you need to make sure that you have capital to actually do what you need to do so you can get a deduction. And that's pretty much what every tax strategy, there's some outlay or investment of money, not just to the professional who's doing it. There's an outlay of money. So you need to have that.
Now, I got to ask this question. How do you, and I'm sure you get this all the time. Person starts a business. How much money should I spend on a tax deduction to reduce my bill?
If you just started a business, my suggestion to you is, first, let's make sure that your bookkeeping is straight. Let's not even worry about the tax planning yet. Let's make sure your books are straight. Do you even know how much money is coming in and out? I can't tell you the number of clients who are like, I'm making money, but it just feels like I'm broke every month. But once we actually sit down and look at the books, no, you are broke every month. You're only making like $1,000. And you still have to live on that. You still have rent or whatever, and food and all the other expenses that are outside of the business. You're not making money because you don't have clarity around your books. So the first thing I would say is, honestly, if you're just starting a business, focus on the tax planning of accounting optimization. That is a thing in tax planning.
Come on, that's not sexy. Nobody cares about that.
It ain't sexy. Nobody wants to like focus on the accounting stuff. But listen, where most people who are starting businesses are losing money is the accounting optimization. They're not keeping track of receipts. They're not keeping track of expenses. That in it, what do you remember what you purchased on January 10th of this year in
I
your
don't.
business? I
I
have
don't.
no idea. None of us know what we purchased. So without proper books, without receipts, without something tracking that, you are missing out on a ton of expenses. So now, and now maybe you were supposed to pay taxes on $50,000, but instead you're paying taxes off of $100,000 because you didn't track your expenses. So that's the best thing you can do for yourself as a new business owner. Hire a bookkeeper who knows what they're doing to maximize the accounting. We call that accounting optimization. And that is a tax planning strategy, is literally maximizing the accounting.
So here's a question. We just got over COVID, PPP. How many people did you run into that classified their PPP money as income?
Yeah. So, yeah. So a lot, because
I'm
this just
sorry,
goes
I'm
back.
clowning a little bit.
No, but I'm saying
This
this
is
goes
inside
back.
baseball for everybody that doesn't know, right? Accountants, we talk, y'all.
Yes.
And we talk about this stuff, and y'all think I just make up all this in my head. A lot of it I do. But a lot of times, some of my content comes from stories that I'm getting from other accountants. That's a real thing.
Yes. That's and
How did you deal with that?
yes.
I got
So
some money. I want to reduce my taxes.
yes. So that's a great example, actually. That's a great example, right? So in you have people who are listing things as income that's not income. You have people writing off things. I had someone who reached out to me who wanted some tax services. They wanted to write off their food truck the same way they write off this pen.
Mm.
And I said, that alone tells me you need bookkeeping and you're not working with a professional bookkeeper. And my answer is no, because you don't fall within my absolutes. You must have a professional bookkeeper. You must have a professional tax preparer. You must not have any outstanding tax liabilities. So even though we're trying to save money, the best on services, the best thing to do is save. There are certain areas where you can kind of cut costs. This is not one. accounting and tax prep, the bookkeeping and the tax prep, those are not the areas where you cut costs. Everybody wants to just jump to the tax planning, but you may not be ready for tax planning. That's another reason why we work with people all year, because first of all, just like if you're purchasing a house, when you go to purchase a house, there's a whole process, right? First, you reach out to a realtor. They got to find out, get you a pre-approval letter. You got to talk to the mortgage company. What can you actually, get approved for? Then you start looking for a house. There's a whole process. Well, guess what? When it comes to accounting and tax and these businesses, there's a whole process. So we need you to follow the process. That's how you're going to be the most successful. And cutting corners, as in, I don't want to pay a bookkeeper $500 a month, which is $6,000 for the year. But in 3 years from now, you find out you owe $40,000 to the IRS. You would have saved so much more money just by having hired that bookkeeper, just by having hired that tax preparer. So in
What's the
the
saying? An ounce of prevention is worth a pound of cure.
facts.
Yeah. Yeah, that
That is
that
definitely
scenario, it's so real for a lot of our business owners.
yes.
Now I say something to offend some people. I have a lot of real estate investor clients,
Okay.
and I say, well, and this is to my mortgage people, my mortgage lenders who always like us to jiggle the figures or write them a letter
Yes.
just to say that they qualify or qualified for this mortgage.
Mhm.
But sometimes it's okay to say, you know what? They don't make enough money.
Yes.
Don't make enough money. It's not your time. But nobody wants to say that.
Well, they need to in 2024.
That's it in 2024.
Yes. I mean, here's the reality. I have been house poor before. Well, all of my money is going towards a mortgage that technically I really couldn't afford. I made it work, but I couldn't really afford it. So it affected everything. There was no travel. There was no, hey, we want to go out to eat. Nah, it's food. What they say, we got food at home, right? You don't want to
Fat
be house
mama
poor.
cheeseburgers.
Yes.
Yeah, I might be dating myself with that. People may not know that one.
Listen, I hope some of them date themselves too. It's wisdom in the years of experience. And so I hope people listen to more of the wisdom. I mean, if you got a mortgage company who's telling you you don't qualify for something, listen, they make money from you buying this house. So
Right.
if they're telling you that, you really can't afford it.
They don't care. They just want the permission because it's not the owners. It are the mortgage lenders, many of the salespeople, and not all of them are bad. Shout out to Liz and Rob who come onto my show often, but I get calls from them saying, can you reduce the amount of deductions that they're reporting to show a higher level of income? And I'm like, no, I can't do that. I can't do that.
Yes, I've definitely had those too. I've had those too. Let me tell y'all about some things I found about real estate this past week. Phenomenal programs that most people don't know about. One of those is when it comes to when you're purchasing a house, you can actually buy down the rate. So if rates right now are at 6.5, and I know this because I'm getting ready to buy another house. If rates right now are 6.5%, you can actually buy that rate down to like a 6% or 5.5% by basically paying a fee. And it's totally worth it because it will drastically reduce your monthly payments. So maybe you don't make enough to buy the house that you want, but maybe if you bought down the rate, you could get more house because you could still come in at a lower monthly payment than you would at the higher amount, or even at the same amount, at a higher rate.
Makes sense. Right. But
So ask the mortgage provider.
yeah, but all of those things take cash. Right.
Yes,
So
they do.
and excuse me, a lot of business owners go through different things throughout their journey. We all do, right? So sometimes you might have a lot of cash, sometimes you might be cash poor.
Listen.
but you got to understand where you're at in the cycle.
Yes.
But we talked about something, and I want to put it on the screen real quick. We talked about cost segregation. So
Yes.
there's a clip floating around that I want to share with you all, and I want to get your thoughts about it. Because for y'all that don't know what cost segregation is a tool. It's a strategy often used by a lot of real estate professionals and investors. It's a way to help. I don't want to kill you with the technicals, but it's a way to help increase the overall cost basis of your property to get you more depreciation. And I just messed it up by giving too many technicals. But let's just talk about it real quick. Give me 1 second. I'll put it up on the screen because I find this utterly hilarious how TikTok just loves these things and they go wild and crazy.
Y'all be mad at the IRS when you need to be mad at your accountant. Friendly reminder that you pay for what you're.
Okay, so I want to talk about that real quick. I'm really tired of these so quote unquote accountants, because this young lady I believe is an accountant. But they're using accountants and tax preparers and tax professionals as punching bags. And I think that's so trash. I think it's so trash, but let's get further into it.
Your accountant doesn't know. IRC doesn't actually want you to pay taxes. That's why I'm teaching average people how to not be so average taxpayers and utilize strategies that are available to them. Today, we're going to talk about cost segregation. What's that, Stalia? Give me a sec, I'll tell you. Cost segregation is essentially accelerated depreciation. Instead of depreciating something over 20 to 30 years, you can depreciate it in 5, 7, or 15 years. It's depreciation on
Now, how many people actually know what depreciation means?
steroids. We're gonna look inside of the property and pick a couple of things that we can expect to depreciate a lot faster than the building itself. Things like fixtures, carpets, and lighting. Cost segregation is extremely powerful in lowering your tax liability. If you'd like a longer video on cost segregation.
So cost segregation can be very powerful, but it's not powerful for everybody. You have to, one, pay for cost segregation. And that's the biggest point that she left out. And I'm like, how are we talking about cost seg? Like accountants do cost seg. We will advise cost seg, but we don't necessarily do cost seg. And yes, there are accountants that work at cost segregation companies, but there are whole companies dedicated to this.
Yep.
But I don't get this, but somebody will follow this.
Yep.
And I guess reach out to her. But what do you think about that, Shonta?
So it's tough because I feel like a lot of these like short clips, the clips that I feel like get the most exposure and go the most viral, be the most wrong. They standing on wrong. Not standing on business, standing on wrong. Right?
Loud and wrong at that.
Loud and wrong. And so people hear this and then they come to me. Like I had a client who came and was like, I want to do cost seg. This person reached out to me about doing cost seg. Someone had reached out to them and they gave them the numbers and stuff and said, will you analyze this and tell me if I should do the cost seg? And I was just basically like, well, first of all, there's a fee if I'm analyzing anything. I don't know if this is good in your particular case or not. There's so many pieces of information that are left out, and I understand they can't cover all of that in the video, but you know, I don't know. People have to do a better job of vetting too, because when you hear this stuff, you got to understand there's so much that goes behind it. And you can't just take it as like, this is something I can do. Cost seg don't even make sense for most people under 200 who have a property under 250 at minimum. But even at someone was saying a property at $1 million, it didn't make sense.
Let's clarify. Let's give them that 250 in value, right?
In value, correct?
Yes. Because somebody be like, well, I got this property and it's XYZ. And it's like, no, no, that ain't it. That ain't it.
Correct.
But I think it's because everybody's looking for the loophole, right?
Yes. Yes.
I know you said it earlier. I actually hate that term.
Yes.
But I only hate it because we use it wrong. Like all this stuff is public information for the most part. If you can read, you can do taxes. Yep. However, you might not do them right because you may not understand what's needed. However, but like we always are like acting like there's some conspiracy theory or Illuminati behind us that we don't have access to do these things. And I'm like, that's not true. That's not true. Just take some time. Like you said, pay a professional. Do a consultant, not do a consultant, do a consult with a professional. But
Right.
I don't know. People don't want to spend the money. I don't
Nope.
get it. I don't get it.
Nope. Tax planning is a premium service. I tell people all the time, it's a premium service. It's not something that you are entitled to. It's not something that you need to do. So if it is something that you want to do, then you need to take the time to research. You need to take the time to work with a professional. You need to take the time and the resources and the money to pay someone who knows what they're doing. The last thing that you want is to do some things on your own that you heard from someone else on TikTok or any other social media platform, and then take that information, try to apply it yourself, and now you owe the IRS 20, 30, $40,000 or more. I've seen this happen time and time again. It is not worth it. You could have saved that and possibly saved so much more just by hiring somebody. And honestly, a true professional is going to tell you, like, there's really not a lot that you can do. I tell clients this all the time. If you come to me and you're not ready, I always tell you you're not ready. If I can't save you anything, we usually have a guarantee. So if I can't save you anything, we have an analysis fee. So before I even do anything, I'm going to analyze what's going on with you. I want to look at your prior year tax returns. Like, I want to find out what's going on with you, see what we can do or cannot do. And we have a guarantee that if you pay us $500 or $1,000, whatever the fee is, if we can't do anything for you, then we give that back. No questions asked, because not everybody is ready. But I usually can tell from the first call if you're ready. If you income wise you're not ready, and anything else you're not ready, I would usually say, you know what? Well, I don't think you're ready. I know from our questionnaire intake form, and it will actually tell you you're not ready. Here's another service that I will recommend.
Now, you said income wise. So, what's a good income to even start thinking about tax planning?
So I would say income wise, I will probably say ideally $250,000 a year, um, if you have a business.
And
If
is
you
that
don't
net or gross?
have gross,
Okay.
if you don't have a business, I would probably say 450 a
Mhm.
year. If you're just talking about wages, because there's not as many things you can do for wage earners, and the things you can do have big capital investment amounts.
Yes.
So in order for you to do those things, then you're going to have a certain amount of money. In businesses, the reason why I say 250 is because if you have a business, let's say you're making $150,000, $200,000 a year in business, well, you're probably running the business, managing the business, helping the business to grow with that money, but you're also using that money to live off of. And so for a lot of people, once they do that, they don't have the excess funds to invest into tax planning strategies, and into a tax strategist or tax consultant or tax planner, whatever you want to call them. They don't have the funds to invest to hire somebody, let alone for the things that they would need to invest in to get the savings, such as retirement. If you wanted to do, hey, I want to do retirement. Well, you have to have the money to put in retirement for us to get the savings.
Right. Right.
They don't have the money for all of that.
And I'd be remiss if I didn't ask this question. What's the difference between, and we kind of did, but I want to go a little bit deeper,
Mhm.
in between tax preparations versus tax planning in regards to what should a person expect from their tax professional versus from their tax planner?
That is a great question, because I get this one all the time. Um, from your tax preparer, you should expect a tax return that was completed properly based on the information that you gave them. That is it. I get a lot of questions like, I don't know why. It's never a question. It's usually, I don't know why my tax preparer hasn't been helping me save money all these years. And now I found you. And I just be like, okay, wait, let's give them a little grace. You hired them for preparation. They perform preparation. They did what they were supposed to in compliance. It was correct. It was accurate. You didn't hire them to do planning. So you can't get upset with them that they didn't give you a service that you didn't pay them for, nor did you might have asked for it, but that may not be their expertise. So if you go to a brain surgeon, right? People understand that there are different types of doctors. If you go to a brain surgeon and you say, hey, Mr. Brain Surgeon, I know you specialize in this, but I got an issue with my foot. Can you take a issue? Can you take a look at my foot? That's not his expertise. So can you get upset with the brain surgeon because he wouldn't look at your foot or they didn't know what to do with your foot? No, I also wouldn't take my foot doctor and then ask them to do brain surgery on me. Like that just wouldn't make sense. So you have to give grace to your preparers because you have hired them for preparation. You have not hired them for planning. And so if you haven't hired them for planning, they have done what you asked them to do
Right.
within the fee that they charge. If they don't do the other service, you also can't get upset with them because just like tax preparers take CE and learn that all year, tax planners, we take CE and we work with people to learn about strategy all year. I will tell you now, I'm not the best preparer. It's a lot of things I don't know. That's because I don't do that stuff anymore. So when I was a preparer, every year I was taking stuff to learn how to be a better preparer. Now that I'm a planner, I'm a strategist, I do stuff that focuses on that. I know a lot of stuff, but there's a lot of new things that I don't know or I don't know as well as somebody who specializes in tax prep. So don't
Right.
give them a hard time because that's not what you hired them for.
Right. And yeah, again, I said it a little bit earlier, but it really drives me crazy because a lot of tax professionals, planner or preparer, can do tax planning at
Yes.
various levels, but you didn't engage them and pay them for
Yes.
that. But then you're like, I didn't write this off. Well, when we get to tax season, because we are in the throes of tax season right now,
Yes.
a person doesn't necessarily have a time. I don't necessarily have the time to say, hey, did you track the mileage on your vehicle? Is there a log? Oh, you bought this piece of real estate. Do you have the titlement or the closing sheet? Did you keep all that? I mean, yes, I can ask you for it, but you should kind of already know this thing. So I probably should do like a tax readiness course or
Yeah.
something like that.
You should. You should. You
But
should. And
yeah,
here's the thing, too. One thing you didn't say that I'm hoping people are getting what we're putting down. But
say it, say it.
one thing you didn't say is it is not your job. It
Mm,
is not your job to ask those things because those things have nothing to do with compliance. It has nothing to do with compliance.
I got to give you the horns.
Good.
You are dead on when you said it. Technically, it's not my job. I'm actually going over and above. What's crazy, we talked about
Right.
this earlier. I'm going over and above, and people don't even realize that I'm going over and above.
Nope. And they only care when you say, listen, I can no longer do this and I now have to charge for this. Then they're like, well, they want to get it for free. But it's like, I mean, everyone has to work and eat too. And so I think it's only fair if I'm going to take additional time
What
to
do you
research
mean? I should
things.
care about paying my daughter's tuition. By the way,
Yeah.
I found out that Shonta goes or went to the same college. My daughter is now attending. I ain't
Yes.
gonna tell y'all now because there's some weirdos out there. But I thought that was awesome. But yeah, I gotta pay her tuition.
Yes.
And people don't care about
At
that
all.
at all.
At all.
At all. So that was a great, great point right there. So call segregation, talk to a professional,
Yes.
pay that professional.
Yes.
Don't be cheap. Don't be cheap.
Nope.
And I'll say this, tip your people too. Because a lot of times, whether it's tax prep, tax planning, they're saving you way more money up front than you will ever, or not ever, that's saying it wrong. They're saving you way more money that you're paying them for than what you're going to benefit for in the long run. And
Absolutely.
you won't even realize it.
Yep. Absolutely.
What's one of the most wildest tax planning cases you might have encountered over your years?
So I know I've had a lot, but I had one recently, where I had a client who was, they had done some stocks, right? And when they filed the return, they didn't realize that they didn't know to put in basis. So they basically didn't know for the stocks to say this is the original cost. I might have made this much, but this was the original cost. this is what I made. This is what I made in total. So this is the difference. And so you know what the IRS said? You owe the full amount.
Because that's what you reported.
Because that's what you reported, which was over six figures. They was about to, when I tell you they was about to owe the IRS over six figures, and they would have paid it if they didn't reach out. And I was like,
Now that sounds more like a tax representation.
absolutely. And
So
it was
what's
a
the
tax
tax plan?
representation.
Okay.
They came to me for tax prep, and they actually came to me for planning. And when they came to me for the planning, they said, listen, we got this. I don't know what to do with it. Can you help us? And I said, let me take a look at it. It was very simple to solve. But had they not hired me to do the work, they would have had to pay over six figures in income that they did not owe. In fact, they only owed $6,000. They would have paid over six figures when they only owed $6,000. So, contrary to the video that we saw earlier, the IRS does want you to pay your taxes. And if you don't know enough to not pay what you don't owe, they will have you paying that too.
Facts. And I mean, if the IRS discovers something's wrong, they'll give you your money back.
Mm-hmm.
Sometimes.
Mm-hmm.
The question is when it happens.
Mm-hmm.
Because what a lot of people don't realize is that an audit, let's just use an audit. I mean, people think that, all right, I'm not worrying about an audit because if I get caught, I'm going to file taxes, I'm going to get my refund. I'm clear. I'm good. People don't realize that the IRS doesn't necessarily come back, and state authorities as well. They don't come back sometimes 2, 3, 4, 5, 6, 7, 8, 9, 10 years, and they'll come with an audit. And Shonta made a great point. Kabari, what did you buy? What did you say? January 10th?
Yep.
So if I can't remember what I brought on January 10th, 2024, God forbid I'm going to remember what I brought on January 10th, 2018.
Yep.
I'm definitely not going to remember. So that's how a lot of people get jammed up.
Yep.
In these scenarios. So wow, that's a crazy scenario.
Yep.
So were you able to help them going forward with tax planning?
Yeah. So I actually, after we closed that, was a very quick case. Great thing was we were getting ready to file. What year are we in? We're in 2023. So great thing is we were getting ready to file a return for them. So actually, when we filed the return, and offset the $6,000 they owe, so they actually didn't have to come out of pocket at all. And then going forward, listen, once we help somebody get out of the jam like that, we become we become, I mean, I might as well put on the cape. I'm
BFF.
Yes.
You get invited to Christmas dinner and everything.
Listen, they got this beautiful Airbnb out west, and I'm like, what days can I get to come and rent and stay there? Right? You become their best friend. So
right.
Yes, they then hired me to do strategy so we can reduce their income going forward. And so, yeah, I'm really looking forward to working with them and helping them. But they are somebody who realizes they don't know enough to try to do it on their own. And so we are helping them and with their business, their Airbnb, and also their wages that they have.
Gotcha.
Yes.
So here's a question, right? For people that are working towards the future, for my business owners, can business owners take tax planning and then use it to reinvest into the business for further growth?
I would say yes, because what tax planning allows you to do is, I think people just look at it as it's helping me to save money. But the reality is this is money that was going to the IRS. So now you have this extra money. There are things you can do with it. Reinvest. I tell people, reinvest into yourself, reinvest into your business, reinvest into your future. You can put it in your retirement. It's all sorts of things that you can do to take that money and reinvest it. Another example is like, even if you're just thinking about stuff like, a lot of people talk about they want to hire their children. Well, listen, if you do it properly, first of all, don't try to do it on your own. Know your newborn or I literally had someone tell me this. Their child who was going to pre-K, who wore their clothes, their clothing line to pre-K, was a model for their company, and therefore they should be able to write and hire the child, but they didn't even have the funds to hire the child and pay the child. So yes, you can take this and invest in you, your children. It's also, you can invest. These are things that you want to do anyway. If you want to invest in your child's IRA, you can hire the child. That's investing into that child, investing into that future, right? There are different things you can do. You just have to do it right. So the whole purpose and plan of bringing on a planner or strategist is that they are going to assist you with doing it right. So not only do you reduce your taxes, but you actually get to make money. You get to build wealth. You get to reinvest into your business from funds that maybe these were things you were already going to do, but weren't going to get any benefit from it. Or maybe this was money that was literally about to go to the IRS that now you can take and funnel back into your business because you properly set it up to save money in various ways in your business or in your personal life. So yes, take that money and refunnel it back into you, invest in you.
Now, let's stay with the hire your kids thing for a minute,
Mhm.
because I have a whole story about that. I had a client once upon a time where I casually mentioned that, hey, they could hire their children because they were working in a business.
Mhm.
They could afford to pay them. There were enough profits to pay them.
Yep.
Now, when it came time to really engage me in the full brevity of my services, they didn't want to pay. They thought it was too much.
Mhm.
On top of that, they hired their child, but they hired their child as an independent contractor.
Mhm.
And so I said, I didn't give you that advice, because they try to say I told them to do that. I said, no, 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 no. I said, you possibly could, but you was being cheap and you wanted to go around me and do your own thing. And so then the child wound up owing taxes.
Yep.
Sorry, sucks to suck, but I don't know what to tell you.
Loud and wrong.
Loud and wrong. Loud and wrong.
Yep.
So, I mean, I see people talk about hire your kids, but they always talk about it from a more of a, how can I say? I would say a fraudulent tax way,
Yes.
because it's always an afterthought, right?
Yep.
It's an afterthought just to save money on taxes. It's not a strategy to actually help increase profits in your business, because you want to use your children, the man hour, the talent to make the business more profitable, more successful.
Yep.
No, they're not thinking about time cards. They're not thinking about, payroll. They're not thinking about anything else. But I mean, what would you say about that in my situation?
So in that situation in particular, I run into stuff like that all the time. I also find that that happens with a lot of different strategies, right? With a lot of different strategies, everybody just wants to do it the cheapest way possible. I heard a little bit from this, or I had a conversation with you. Now let me implement. You're going to do it wrong. A lot of people, they come back. But there is this afterthought of let me do it in hindsight. And there's just this big focus on let me save. They don't realize. So tax planning really is similar to investing in yourself in any other way. That's why a lot of the strategies fall into, or some of the strategies fall into the financial realm, because a lot of it has to do with investments and assets and things like that. So it's an investment. And so a lot of individuals or businesses think that they're just coming up with ways to save money, and they're not really thinking about, no, this is an investment. This is not just let me save money. And if I be honest, a lot of them are saying that because they don't have the money to pay. They don't have the money to invest. They don't have the money to do the things they want to do. So it's like, well, maybe if I could just save money on my taxes and I could use some of that money to do some of the other things I need to do because things are tight. Tax planning, tax strategy doesn't work that way. It's just the opposite. If you are not ready to manage your books and keep that in compliance, and you're not ready to hire somebody for that, you're not even ready for a conversation about tax planning, right? You're not, right? If you're not willing to hire somebody for tax prep to do your tax prep, you're not ready for a conversation about tax planning.
Right. I
You know what I
agree.
mean?
I
If you're
totally
not
agree.
ready for the basic stuff, this is like, think about the bookkeeping, the tax prep. That's the foundation of any house. Tax
Mm.
planning is somewhere up on the roof. And you don't even got to have this. So
Like you said, it's premium.
it's a premium service. Why are we even having this conversation? Why are you stressing yourself out? Why don't even do it? Don't do it.
Mm.
Just manage that income and them expenses. Just focus on that right now. And then we can look at others, you know what I mean? Then it's basic stuff that you can do. Then let's just look at some basic retirement. You know, just do the
I
basics.
mean, honestly, I think retirement planning is one of the biggest cheat codes for any business
Yes.
owner, right? That's a great place to start with tax planning. But what
Yes.
let me back up. You're not tax planning just because you set up a retirement plan. Let me be clear.
True.
But it's one of the things that you could use to really leverage that many of us don't think about.
Yep.
When people were talking about the G wagons during COVID, and they're like, "This is a flex. This is a cheat code." I said, "No, it's not." I said, "A
Not
real cheat code is setting up a pension plan for your company.
yes.
That's a cheat code. That's a flex." But
Facts.
that's the nerd in me coming out. So
Well, I think it's also people want the right now satisfaction. We're in that microwave generation
right,
still, and people want immediate satisfaction. Our people in particular, not only do we want it, many of us need it. And
mm,
so if you are in that space where you're needing it, then that tells you you're not ready.
mm.
You're not
that's
ready.
that's a great point. That's a great point.
And that's even with business. People are like, I'm gonna start a business because I need to make this. And they think about all the things they can do. But if you're in a place, businesses, especially getting started, are expensive. It takes a lot of time. You don't know what you're doing. It's so many caveats. If you are in that place, what you need is a job, maybe an extra job. What you do not need to do is start a business that is going to take even more money out of your mouth, at least for a particular period of time.
Or
So,
or at least it's just a side hustle. You're not
yes,
expecting it
yes,
to replace
yes,
your income.
exactly,
I'm a big fan of side hustles, but
exactly,
not
exactly.
to the point where you're like, I'm gonna quit my job. Like, I mean,
Because that's what we doing. That's what
right,
we doing. That's what people been doing. And then
right.
they be out here like, I don't have no money. Of course you don't.
I mean, I can't tell you how many Uber and Lyft drivers I've met that said they quit their jobs because
Yep,
they're the boss of them. I'm just like,
yep.
you're not the boss of you.
No,
Once Twitter, not excuse me, Twitter, Uber and Lyft say your rate's this, you don't
yep,
have any control over that, or you're not. We're not sending you any more rides. You don't have any control over that, and that's no diss to my gig workers and any of them. It's a great hustle. I don't think of it as an actual business though. And then most of them are not thinking about the taxes
no,
that they're going to incur.
nope. Because they spend that money as soon as that money come in, that money go out. The best thing you can do is, the best thing you can do is take some of that, put it aside for the taxes. But again, that tells you if you don't know what to do in a business, you're like, I don't know what to do.
Mhm.
I don't know how to get this business. I don't know what to, and I think we all go through that at different times in our businesses. Like, what is the next thing to get me to the next level? I think all of us have those questions. But if you're literally like, yo, I don't know what to do today, you may not be as much of a boss or entrepreneur as you think. But if you are in a space where you like, yo, I need some money, is like you said, if you want to do a side hustle and hey, I'm gonna start this side hustle, bringing in a little bit, but understand it's going to be the side hustle. If
Right.
you
Not the
can't,
main hustle.
it's not gonna be the main thing.
Yeah, absolutely.
Yeah,
Absolutely.
it's not gonna be the main thing. And it might be that way for a little bit until you can transition to it being the main thing. But you want to make sure you have all the pieces in place to be able to do that. And there are lots of pieces and lots of things to consider. So just, don't listen. I'm telling you this. I'm telling you this as somebody who also did this. I didn't leave my job just to say I wanted to start a business. I left my job because I wanted to be home full time with my kids. My kids were young and I felt like I was working a lot and I didn't really know them. And my husband and I had talked about it for years, and we had got his income to a place where he could sustain the household. But that took a while. That took a few years of me not wanting to go to work and going to work and doing all those things so that we could get to where we needed to be, honey. And still, a year in, we put some money aside, and a year in, we was feeling that thing. We was feeling only having one income for a household of
Right.
five.
You got to
We
sacrifice. You got to
listen.
sacrifice.
Y'all don't put yourself in that situation. Learn from somebody who was in that situation. And it took us, it took me like one day, like, yo, we got baseball. This was literally it. It was like, we have baseball coming up. The kids want to do baseball. We don't have income to sign them up. We don't have income for cleats, the uniform, all the stuff that comes with it. I have 3 boys. It was gonna be like $500. Just signups and uniform was like $500. Credit cards was maxed out, and it was like we got one income. And here's the thing: my husband made good money. So all of y'all who are, I'm trying to get to 6 figures. Listen, 6 figures in this society is not the same thing as it was when our parents were getting 6 figures. So my husband made good money and he was a teacher and he made over 6 figures. But by the time that money came home after taxes and pension and all those things, it was only $4,000 a month for a family of 5. $4,000, and he was bringing in 6 figures a year. And so it was a struggle. And that to me said, you know what? I'm going to have to do exactly as you said, start a side hustle. And so that side hustle, like the first month, I made like $150. That's 150 more than we had the prior month. But I had to pay. I signed up for someone's program to learn how to do this. Because yes, I had been in accounting and tax industry for years, but I didn't know how to start a business. That's not the same thing. So
Right.
even understand, even us as professionals, running a business and doing a job are not the same. So I had to learn how to do that. I had to invest into somebody's program, even though I didn't really have the money. But I said, listen, what we not going to do is take this money from this thing that I invested in and not use it. So when I say I went through that information forward, backwards, and in every which way, I still to this day rely on information from that.
That's
From
dope.
years ago.
So it's still paying dividends.
It's still paying
That
dividends.
that investment, because you had to make an investment not
Yes,
only in money, but
yes,
also in time and
yes,
attention. Because
yes.
people think it's just money. It's not just money. It's not just time.
Nope.
You got to pay attention to it too. But
Yeah.
that's dope. Listen, I could keep you all here all day long, but I want to get to some of these comments because we always talk to the people. Because I try to make this more of a community outing, a town hall thing. So we got our tax sister in the building.
Hey, friend.
Yep. Hey, friend. That's my tax sister, K Renee. We fight like cats and dogs, but we love each other. She's dope, people. She's dope.
Yes, I love her.
Hey, Andrea, how you doing? How you been?
Hey.
Now, going back to K Renee, she was like getting. Now, I will give K Renee credit right now because she be like, friend, you ain't charging enough. Friend, you ain't doing it right.
Yes.
So I gotta give her props for that. So she says here, I will never understand why people do not understand the definitions of conflict of interest. It's crazy. She was talking about going back to mortgage lenders, asking tax professionals to joy rig their tax returns so they can get approved for a mortgage. She's right.
Yep.
She is right. Hakeem, how you doing? He says, above all, you should get out of debt. Yeah, sometimes. I think that is a cancer a lot of times when we don't pay attention to it. However, and most people can't manage that. That's what nobody's telling you. Most people can't manage that. But those who can, it can be a great accelerator for building wealth. Yep. Teach the people. Absolutely. Still Rocks is in the building. And you are right. Gotta pay the cost to be the boss. James Brown taught us that. Listen to those lessons. All right. So Still Rock says, my wife and I were talking about this recently. A lot of business owners just throw out these business loopholes, but don't know exactly how to keep the documentation. That's correct. That's correct. Listen, y'all, documentation is everything.
Everything.
There's this
Everything.
really weird word. It's SAT word. It's called substantiation. The IRS loves that word. All it means is, can you prove your shit? Excuse my language. Can you prove that you did it? And here's a little tip. Matter of fact, I learned this with K Renee. IRS does not always take receipts. The IRS will not always take receipts as substantiation. They want to see the form of payment, whether it be a check, credit card, whatever. You have to really prove, depending upon who you get, that you actually spent this thing. And if you ain't got the proof for it, you can kiss that tax deduction goodbye.
You should play the horn for yourself for making that comment.
Thank you.
Because that is facts. A lot of people do want to use statements. That don't mean they're going to accept those statements. And a lot of times they don't.
Correct. All right, I got to get myself the horn, so that doesn't happen often. I'm always looking for everybody else. All right, so Aaron approves loans. All right, Aaron, I hope you're not a mortgage lender that I'm talking about. I know you're not. I'm just playing. So Aaron says, I just text my tax professional. Does she do tax planning? Great question. You should ask them, right? Another sister, by the way, as well. Okay, great live. Thank you. Now, this is something that I run into a lot. Some people will see me here on the show, and I'm talking about some things. A lot of y'all don't realize how old I am. And like I said earlier,
I definitely didn't. When you said 35 years, I'm out here like calculating, like, what?
Yeah. So my dad, I'm second generation. My dad was a tax accountant.
Me too. My mom too.
Wow, there we go. Horns for us.
Yes.
Right. So a lot of this stuff I'm talking about, I've been going through since I was a teenager, pre-teenager, right? Plus, I was also a financial advisor. So I've been in and around the money space, business space, small business space for a long time. And a lot of these things I probably take for granted that I've experienced or that I know. So I'm just being honest. Hey, Tony Z. Welcome. And she says, okay, how often do you two help clients properly use the vehicle as a business expense on their tax return? Seems a little complicated. It's not really complicated. It takes pre-planning. And it's a little tenacious. Well, I'm using the wrong word. What's the word I'm trying to use, Shonta?
What you said takes pre-planning.
It does. I was going to say tenacious or tedious. Tedious was the word I was looking for. Tedious. But it's not really that tedious. Listen, everybody got one of these things. It's a phone.
Yep.
I recommend my clients use QuickBooks. And the QuickBooks mobile app has a mileage tracker on it. If not, and by the way, I'm not getting paid for this. Also, you can use Mileage IQ.
Yep.
I like Mileage IQ as well. I'm not getting paid for it. Set it up. Make sure you go and you categorize if it's a personal trip, if it's a business trip. And guess what? If you are leaving home and you work from home and you're driving, not work from home, let me take that back. If you live at home and you're driving to work or driving to your business, those are not business expenses. Those are what's called commuter miles. Add anything for that, or you got anything for that, Shonta?
No, I think that's exactly it. It takes the planning. But for me and my clients, if this is something you want to do, what we do is we have a conversation about the fact that you want to do it. And then I give you a outline of like, these are the things you're going to need to do to keep these things in place. And then we meet quarterly to make sure that you're doing it right. So if you're not doing it correctly, then we make adjustments during the year so you can actually take the deduction next year. So again, to your point, it just takes planning. You just got to plan ahead. And here's the thing. A lot of us don't want to plan ahead. We don't find it necessary. We don't think we need to do it. But then when you get that big tax bill, you be like, I should have planned ahead. So just trust us when we say it's worth it to plan ahead and to do these things because the savings are largely impactful. And this is literally money. Like literally, if you think about the vehicle, this is you were going to spend this money anyway. That ain't going to change, right? You're going to spend this money and go to wherever you were going and have this appointment. You're going to do that anyway.
Yep.
But instead of getting a deduction for it, you're just going to it'll just be classified as income because you didn't track it all year. It's going to be classified as just part of the income you made, not have any expense there. And so now you're going to end up paying more taxes than you have to. So that's like a way of just throwing away your money. You might as well just open a window, throw it out the window because it has the same impact. So literally, it just takes a little bit of planning and you can get these things written off. And a great professional is going to assist you with that all year.
Facts. Orange for you. All right. So Tony Z asked the question. Tony, did you like, comment, share? Did you subscribe to the channel yet? But I got you. The apps I talked about on your phone, QuickBooks, right? If you don't have a bookkeeping system, I use QuickBooks. There's others, but that's the one I tend to recommend. However, just for the application of tracking mileage, I recommend Mileage IQ. Do you have any other, Shonta?
Those were my exact two.
Okay.
That I would recommend too. I also have just a general Excel sheet, but honestly, that becomes so tedious. I recommend, and I think it's best to use an app if you can. It's
Yeah, I mean, I think in 2020, we're talking about doing better in 2024, right? In 2024, I mean, I know all the old school tricks. Keep the mileage log for when you go get your oil change. Write down what's on the odometer January 1.
Yep.
Those are all cool, kinda, but not kinda. And I won't bore y'all with that. But if you get the things, the apps we talked about, it'll give you an actual factual log.
Yep.
What does the IRS want? They want a goddamn log.
That's exactly what they want.
Give the people what they want. Give the IRS what they want.
Yep.
So, Tony Z, I'm not sure what kind of business you got, but please keep a log. It will save your life. It will save your life. Alrighty. So, Shonta, I could keep you all day long.
This is great.
But tell everybody where they can find you at.
So if you are looking for me, you can find me at www.shontathomas, just like my name, shontathomas.com. On there, you'll find out about the services that I offer. You can schedule an appointment with me, any of those things. So you can shoot me a note. So that is a great place to find me and to get some assistance. But I'll be in these streets, y'all, learning what I need to learn for all of you. So hit me up. I'll be happy to help.
All right, and I just put Shonta, www.shontathomas.com. I just put it in the chat so that it just went out to everywhere I'm sharing this. I'm sharing this on LinkedIn, Facebook, YouTube, a couple of different pages. So y'all connect with her. She is a plethora of great information. All right. But I will see y'all the next time. This has been Tax Tuesday. Y'all know every Tuesday we're here. We're here a little early. We're here normally at 7 p.m.
Oh.
But I made an exception for Shonta because she's special. So we're here a little early, and I actually kind of like this. So I might do this more. Just get it done in the middle of the day, and then because I tend to wake up at night. But I won't bore y'all with that. But until the next time, remember tomorrow is Wealthy Wednesday. I will be back. See y'all soon. Y'all have a great day.
Bye.